Hi and welcome back to the Conscious Day Trader. Today is going to be episode 6 on how to change a challenge step by step. If you haven't seen the previous videos, make sure you click on the link above and that will take you to the playlist where it started with me purchasing one of the hyper growth programs from the Fivers. And here we are. We're going to find out where we are in terms of profit and percentage gain. This is the second week, remember. We have an aim to try and make $150 per week, where we'll see how we're closing this week and we'll see the update. What were the learnings in terms of interest rates on the pound dollar? I only trade the pound dollar. Also what we're looking for in terms of analysis for the next week and today. We're currently in 2 positions, so we'll see where that's going. If you like all that, guys, make sure you like and subscribe, and let's head straight into the analysis. Okay, here we are. We've got the HAB, as you know it. When you come onto your screen, you will see a nice looking the Conscious Day Trader chart, that 45 angle degree. Hopefully we can keep going that. However, we are doing a bit of hedging as well at some point, so that is you're gonna see these kind of dips that happen now and then because I'm hedging position. If I have to get out of position from a hedge, I have to close it. But you can see the win rate is going up slowly. We're at 60%, now we're at 76%, and probably gonna get even higher. Profit factor, we're at 376, still looking great. We've placed 38 trades and we're currently up on $146, which is 7% of passing the challenge. So everything is looking good. We do have 2 positions, as you can see here, one on 0.1, I guess, and 0.06. I closed partials on this trade here. One is at $20 down and $34 in total. However, I have closed some profit today, probably break even for today. $146 was the aim for last week. Obviously, I didn't manage to do that. So I'm still happy with 7%. That's 4% last week and 3% this week. We'll see how we close the day. If we're managing to do 4% a week, I'm still happy with that progress. The aim is to have this account forever. So the slow progress does it, not the excitement or the big percentages every week. Okay, let's jump and see where our condition is with the chart. We can see here that the trading that all happened yesterday was at this level here. I was anticipating price to go higher. It did push down. You can see my 2 positions there after taking liquidity and fair value gaps on a daily. So ICT 2022 concepts was the trades there. I can show you on when we jump on trading view. But if we stick with the MT5 and we go to the current price, you will see that this zone here, as you zoom out on the chart, was taking liquidity out of all these areas here, and it was on a higher time frame hitting a fair value gap. If you haven't seen it, we were live on Traderlicious yesterday and we're talking about that trade, and it did actually happen with the impact of interest rates, which stayed the same on the pound dollar, and that was deemed as negative originally, but then it started pushing the price after we had the talks post the event, half an hour post the event. And you can see overnight consolidated at the highs, and now it broke even higher. And we did close some positions there and take some profits. And now it's kind of recalibrating itself, coming back down into this fair value gap here. And we'll see what happens next. As you can see at the bottom, these are the 2 trades. It's $52, but if we go to the history, we're currently up $166. That's the whole history. If I change this and go to custom and I go to today, did close $28 from my top position. Now I have to consider what I'm going to do here. Sometimes, and in the future when I write my ebook about passing the Fivers, I'm going to discuss this. The most important thing is to understand your risk upon your account and upon your performance. What do I mean by that? It's okay risking the same way on your account, but if your performance is not always the same, then the risk management is not done correctly. It's always better to risk manage upon your performance as well. So let's say I've had a really, really good month where everything is going great. I'm in sync with the market. I can read price action really well. Everything is working. Then I need to possibly identify an area where I can increase a little bit my risk to allow more room to be correct. On the other side, if I've taken a few hits and I've lost a couple of trades, it might be sensible to decrease my risk, being underperforming to a level where I need to decrease my risk. That's why I don't believe in a fixed risk to reward ratio, because statistics, for them to work, everything has to be the same, and we're human and nothing is ever the same with humans unless you're trading on an EA robot. So what's the play here? What I'm going to do, I'm just going to see how further down we're going to come. The positions we're holding are these two positions of 0.1. So every pip that moves, that is $1. And now we're $55 down. We just need to see what we're going to do with this. I think I'm going to reposition one more time, use my third position. It's probably going to come at the low levels of this fair value gap here. I'm just going to do a bit of an analysis now live with you guys on the on TradingView, and then we're going to discuss to see where we're going to get in. I do like this position here, this fair value gap at the bottom end here. That might be a nice entry to push the price higher and hopefully either reposition. But because the price is so far up, what I might do is something that I call risk mitigation, and I teach that in the Vanguard group. What I mean by risk mitigation, just a brief, I will use the profits of this position to risk manage my worst position. So I might close part of this position here with the profits that I make of my best position. And sometimes I do that when I think that I'm overextended, that my worst position is too far away. So I'm not going to wait for it to reposition. I'm just going to close a partial of it and then re-enter with the bouncing method later on. If you want to know everything about bouncing, repositioning, risk mitigation, everything about how I trade, I've got 41 videos now on Zoom calls where people have been asking me questions. I've also done presentations on this. So if you do want to join the Vanguard, guys, in the description, I've put the Vanguard upgrade. If you click on that, it will take you to Discord and you can upgrade and join our community. Like I've said before, if you do want to secure, because things are going to be changing in the Vanguard, if you do want to secure your spot in the Vanguard as it stands now, and you've got probably a couple more weeks before I announce something exciting, you have to join in the next few weeks. Okay, so let's go in detail. We can see now where it's pretty much consolidating there. We'll see if it pushes down to get an entry. But before we do that, let's go and see what the pound dollar has been doing. Okay, so here we are. We've got our lines in, which is our levels. It might look a little bit messy, but bear with me. I'm going to explain to you what these levels are and what the lines are. Look at that liquidity draw, guys. It's gone to the pip there and it's pushed up. So, and also on the fair value gap above that we talked about previously on our previous videos, it actually filled up nearly to the pip. So this analysis is just showing that we're in tune with the market as this is happening. So what we're going to do today, this is another fair value gap that we looked at, identified. It came and tapped into it and then got rejected. I need to move the dailies to my previous day. I know I have an indicator to do that, but I'm going a bit old school now. I just feel like I want to do it manually. And equilibrium, we just need to find a Fibonacci retracement so it can give us the 50% of the move. And then we're going to move the equilibrium to the 50, and then I remove the Fibonacci, and that is all ready and done. Why I do that is based on the ICT 2022 concepts, because we want to see if there's going to be a drive towards the liquidity of the previous daily high or the previous daily low. The black lines, if you want to understand what that is, if you remember, it's a fib retracement from the bottom of the move all the way to the top. So I'm going to drag from the bottom here, and this is on a daily level all the way to the top. That's going to give us the retracements on the 23.6, 38.2, 50%, which we tapped into, and the 61.8. So where would be the next liquidity draw? It looks like it would be on the upside. However, we are getting a rejection on this fair value gap on the time frames lower, and that's what we're seeing now, the aftermath of the interest rates. The liquidity here has been taken out, so I can take this out now. Also, the liquidity from the live with Rich on Traderlicious. As we were talking, I was doing the analysis and I was showing the guys that I think the liquidity is going to be taken out, and it did, then smashed down and continued higher. This is classic ICT, guys. This is turtle soup. Come in, take the high, comes back down, takes the liquidity below, and then does a classic ICT, push higher, fills the fair value gap, push higher, fills the fair value gap, holds above the 125 round number. You know I like my round numbers. And now is done continuation of consolidation. Now breaks above, fills the fair value gap. I want it to see a little bit lower to see if it's going to continue higher and to fill the whole fair value gap. I might be interested there in repositioning. We'll see. The only thing that we have to be aware of is that it's taken now the previous daily high, and it could be pushing back to equilibrium. That's we need to make sure that we are aware of that when we're analyzing and breaking down the charts. Okay, I'm just going to bring on the scruffy levels that I use, as you always know, and we can see that we don't have any big interest I use the scruffy levels, other people use supply demand. Whatever levels you're using to identify turns in the market, you can do your own thing. But I am so used to doing this, it's hard to change. I even use the same colors because it really takes me back from the beginning journey of trading, and it's always been the one thing that really works well. And I understand the concept behind the levels and putting coloring so you can see it on all time frames. Now, what are we looking at? We're looking at the rejection on the highs, and we've taken out this fair value gap now, and we're starting to push down. We're going to see if we're going to continue higher. Where? If we were going to continue higher, we're going to take this level out. So this was my next interesting question, is are we going to be breaking to the upside to take out this level here? We're after filling this fair value gap. Now I want to see that price come a little bit lower, and then I might be interested in entering this. Some people might see this challenge and say 7% in 2 weeks. That is not a lot. But guys, you have to understand that you have to do it in a predictable manner. You know that 99% of people fail these challenges. You know that 1% that pass the challenge don't even get a second payout. They always blow their accounts. How do you manage to be profitable down the line for multiple years? Is by doing things that are predictable in terms of yourself, your mindset, your ability, your skill set, but also your risk management and how the account is progressing down the line. So we have to take it slow, because this account is not to pass a challenge on a gamble. This account is to be the account that's going to create an income, a second income alongside the bootcamp account and my own personal accounts. And at the end, all these accounts together create the capital that's required for me to be financial free. Now, make sure you like and subscribe, guys, and please do it, as it makes a massive difference to the channel. If you want me to show you content like this, live trading and the challenge on hypergrowth. If you do have questions, make sure you let me know in the comments, and I'll try and get back to all of the questions. Until next time, have a good weekend, and I'll see you Monday.